Hey everyone, welcome back to Corporate Decoder, the place where we break down the Wall Street jargon to see if companies are really wagging their tails or just chasing their own tails with these financial reports. Looks like Trupanion might be barking up the right tree this quarter. Let's dive right into Trupanion's latest financial report. This is their quarterly update, so we're looking at how they did in the second quarter of 2025, the 3 months ending June 30th, and also the first half of the year. And what we see is a company that's growing pretty steadily and seems to be turning things around after some tough times. Looking at their income statement, a couple of numbers really stand out. First, revenue. For the 3 months ending in June 2025, their total revenue hit about $53 million. That's a solid 12% jump from the same time last year when it was around $314 million. And for the first half of the year, revenue was almost $700 million, up 12% year over year too. This growth is mainly coming from their subscription business, where they saw a 16% increase in revenue. This means more people are signing up for pet insurance, but their other business, which they don't focus on as much, also saw a small increase. Scroll subscription business is really the engine here. They're bringing in over $42 million in just 3 months, up 16% from last year. This is thanks to a higher number of pets insured and, importantly, a higher average revenue per pet. They're getting paid more for each furry friend they cover. This is crucial because it means their pricing strategy and the value they offer are resonating with pet owners. Now, cost of revenue is a big chunk of their expenses, and it also went up. For the subscription business, costs rose by 11%, mostly due to veterinary invoice expenses. That's the cost of paying out claims. While costs are up, revenue grew even faster, which is great news. Their cost of revenue grew even faster, which is great news. Their cost of revenue as a percentage of subscription revenue actually went down. This is smart business, showing they're managing their core business efficiently even as they expand. For the 3 months ending June 30, 2025, their subscription business cost of revenue was 81% of their subscription revenue actually went down. This is smart business showing they're managing their core business efficient revenue actually went down. This is smart business showing they're managing their core business efficiently even as they expand. For the 3 months ending June 30, 2025, their subscription business cost of revenue was 81% of their subscription revenue actually went down. This is smart business showing they're managing their core business efficiently even as they expand. Let's talk about how they get new customers. Their new pet acquisition expense, or PAC, went up 19% to $276 per pet for the 3 months ending June 30th. This might sound like a lot, but remember that their average revenue per pet also increased by 11%. This means they are spending more to get new customers, but they are also making more from them. They are carefully spending money to grow, which is a good sign. For the first half of the year, PAC went up 24%. General and administrative expenses also saw a significant jump, up 32% for the quarter. This is mostly due to higher personnel costs and fees related to their Canadian business. While this is a larger increase than revenue growth, it seems to be a controlled investment in their infrastructure. So how did all this translate to profits? For the 3 months ending June 30th this year, Trupanion reported a net income of almost $9.5 million. That's a huge turnaround from a loss of almost $6 million in the same period last year. And for the first 6 months of the year, they've earned nearly $8 million compared to a loss of over $12 million last year. This shows a significant improvement in their financial performance. Interestingly, they had other income of almost $12 million in this quarter, mostly thanks to a gain from selling some intellectual property. This kind of one-off gain boosts their net income, but isn't a part of their regular business operations. Now let's peek at their balance sheet. As of June 30th, 2025, their total assets were about $847 million, up from around $806 million at the end of last year. Their cash and cash equivalents have decreased a bit to about $122 million. This is partly because they've been investing more, with short-term investments growing to nearly $200 million. They're essentially putting their money to work. Stockholders' equity also saw a nice bump, reaching over $355 million. This increase shows that the company's net worth has grown, largely from their improved profitability. Looking at their cash flows, a key point is that they generated about $31 million from operations in the first half of the year. This is way up from just $9 million in the same period last year. They are bringing in more cash from their day-to-day business, which is a very healthy sign. However, they used a lot of cash in investing activities, mainly buying investment securities, and also paid down some debt. On the operating metrics side, Trupanion is focusing on acquiring pets efficiently. Their average pet acquisition cost, or PAC, has gone up, but they're seeing higher revenue per pet, which is a good trade-off. They're also keeping customers longer, with average monthly retention remaining very high at over 98%. This loyalty is the foundation of their subscription model. Talking about money to run the company, they've got a good amount of cash and investments, over 319 million combined. They also have access to a credit line, which is like a safety net. They seem to have enough money to keep running and growing for at least the next year. Now let's zoom out and talk about what all these numbers mean. Trupanion is definitely showing strong growth, especially in its core subscription business. They are increasing revenue, improving profitability, and gaining market share, which is evident in the rising number of pets enrolled. The fact that they are converting more customers and keeping them for longer is a testament to their product and their customer service. Their investment in new pet acquisition while increasing costs is being done smartly, as they are seeing higher returns from these new customers. The improvement in net income is particularly striking, showing that they are managing their expenses better, or at least growing revenue faster than costs. However, there are a couple of things to keep an eye on. The increase in general and administrative expenses is quite substantial, and while it's tied to growth, it's important they keep this in check. Also, the gain from selling intellectual property is a one-time boost, so their core operating performance is what truly matters. Overall, Trupanion appears to be on a solid growth trajectory. They seem to have a good handle on their business model, focusing on customer retention and strategic growth. They are managing the rising costs of doing business, particularly veterinary expenses, by increasing prices and growing their customer base faster than their costs. This is a delicate balance, but so far they are achieving it. Alright, that's our breakdown of Trupanion's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. We love to hear your thoughts there too. Thanks for watching. See you next time.